Now, we often will hear about taxpayers who get third-party information returns that are problematic because the IRS receives this data based on the type of form that was filed or the amount. They are looking for something on the return and they may not see it there. And that sometimes can create the dreaded inquiry or notice. And we know in today's IRS delayed service environment, the last thing anybody wants to deal with is a notice. I don't necessarily mind a notice because as long as we can explain it, I think it's okay. I think the problem these days are service levels, frankly. So how could a third-party information return not comport with a return? Well, one is the information return is simply incorrect, issued to the wrong person, maybe it's the wrong amount, whatever, the return is incorrect. Or maybe the taxpayer is taking a position contrary to the one the IRS expects from that info return. So let's say, for example, somebody did a fundraiser and received non-taxable gifts, but the platform that facilitated the transactions issued a 1099-K. Well, in that case, the IRS sees a 1099-K, they assume that's business income, right? But it's not. So we're taking a position contrary to, on the return probably, that the amounts are non-taxable, contrary to what the IRS expects from the form that was received. Now, there's no way to guarantee or say disclosing it will prevent the IRS from inquiring. It is possible. I can't say it will. But if you are taking a position on the return and that position is different from what the IRS expects, disclosure can help for penalty protection purposes if your position you're taking, i.e. those monies are non-taxable gifts, has a reasonable basis in the law, even if the IRS comes along later and says, we don't agree, we think these are taxable. So disclosure can help maybe prevent, but definitely can help with penalties depending on the position being taken. So in this case, you would likely use an 8275 or an 8275R